Welcome, Dee. It's wonderful to have you on with us once again. I love having you in my corner, my little side pocket, my tax consultant. I can shoot a little message every now and then. And it's so important to me to have a person who I can ask questions about taxes because you're also into cryptocurrency, and that makes all the difference. So, welcome. Please tell us a little bit about yourself.
Hey there, thanks for having me. I always enjoy getting together with you and, with others in the community to talk about cryptocurrency, but also just kind of help be a part of what you're doing and helping others understand. And understanding taxes is a part of that. As you mentioned, we connected. I think it was in 2019. We connected and started, doing things with cryptocurrency, and we bought our first chain link together, and watch that go up and down, and the pros and cons with it, as with any other cryptocurrency. But I used to work for, and it's interesting story, and I don't think I've ever told you this before, is that my background is in IT,
Mhm.
and one of the places I used to work was at a CPA firm.
Hmm.
And I remember deciding, I wanted to find someone to do my taxes because the person that was doing them, it was just hard for me to get to her and get them done. It was just such you couldn't, at that time, you couldn't send stuff over the internet and all that stuff and email and all that. But I was talking to one of the partners of the firm, and I'm like, hey, do you do taxes? I'm looking for someone to do my taxes. And he looked at me and he said, do you have anything complicated like, you know, capital gains and stocks and all that stuff? I'm like, no, I pretty much Schedule C, Schedule A, and, a 1099. He's like, if you can do all this IT stuff, he said, you can do your own taxes. He said, he said, go get you TurboTax, and it'll walk you through it. And I remember, when I first purchased it and installed it, I'm like, you know what, this is simple to do. Um, but the reason why I still think it's important for you to understand taxes is the same reason you should be able to understand basic accounting. When I took my accounting class, we did everything by, manually and in ledgers and all that. And at the end of the class, the instructor said, now just kind of disregard all that you learned. He said, because accounting is done in software now. Nothing is done manually, but you have to understand what the software is doing when you enter numbers in. And it's the same thing with taxes. Even though everything is computerized, and if you still have to understand what the taxes are all about, especially your individual taxes. And so I used to do taxes up until I guess it was about 2013, 2014. And, as I just kind of advanced at work, my schedule at work got pretty busy, and I kind of had to, to let that side of things go. But, even in doing that, I found another tax person for my clients that I had, and asked her if she was willing to take them, and she was. And then I contacted each of them. And so that's kind of how I got out of doing taxes, but I still continue to educate myself, on the tax laws. And once I got into cryptocurrency, understanding more about how the government and IRS plans on, handling cryptocurrencies, and now NFTs, and, all of the other things that are going on in the virtual world.
So we are happy that you are keeping up with this, and then you can tell us because we
Yes.
don't know what's going on, right? So a little birdie told me that you went to a training recently. So what can you share? What's the
I
latest?
I did. I've taken a couple of classes. One was just basic understanding about, and this particular person actually does taxes, but also is in cryptocurrency as well, that cryptocurrency world as well. And, it was just kind of understanding how it's taxed, and even went into some of what I thought was good, because a lot of the people on the webinar were tax professionals who were just trying to learn and understand that environment of cryptocurrency and how IRS is going to tax it. So he explained about blockchains and all that, and pretty much there is nothing new. I would say to report, except it's it's complicated. Taxes in general is complicated. And I think about when Trump came into office and he was supposed to be simplifying the taxes and the whole process. I'm like, if he had been able to do that, a whole bunch of people would have been happy. Um, but I think as far as the cryptocurrency it's like capital gains. It is capital gains. It's the same way, stock would be handled. You purchase stock. If you hold on it for a certain period of time, and you make a profit, you pay less in taxes. And that threshold is a year. If you hold on it for more than a year, you pay less taxes. It's what we just call it a long-term, holding. If you sell it and make a profit and you haven't kept it for a year, the taxes are higher. And so the other class that I took was talking about NFTs. It was talking also about foreign currency and how that might play into it. And normally I would say that's not an issue, but I think it's something that people might want to think of if they're going to be doing something in another country. And I'll share that in a minute. But NFTs is pretty much going to be treated as probably as property, but they don't have any. The IRS has not passed anything, So if you purchase or you have an NFT or you purchase it and then you sell that NFT for a profit, it pretty much is the same way you would do capital gains. But at this time, there is no laws on the books as far as NFTs. But they were talking about foreign currency and what is it? Reporting income that you make, in another country. And so one of the things that I was like, okay, well, this really isn't pertaining to me, but I happened to be talking to a consultant that I work with a couple of weeks ago, and she was saying how she was thinking about moving to another country and running her business from that country. Okay. And I thought about, if you ever look at a lot of these house hunters and all that, or international, where people are buying, the United States are buying homes and moving to other countries to run their business, because as the internet provider service, is more improved in some countries like Mexico and Puerto Rico, and some of these where the cost of living is lower, people are moving to these countries and they are running their business in the United States from this country. And so one of the things I said I'm paying attention to is the reporting requirements if you are in another country, because if you're in another country, you might have to have an account set up there, and how that impacts what you have to report back to the United States. Because as long as you're a citizen of the United States, you have to adhere to the rules, the IRS rules here.
Okay.
And so I was thinking about that. And so they talked a little bit about if you have cryptocurrency and you're living in another country and it's maintained in that country, do you still have to report that to the United States? Because one of the whole crypto space was supposed to be, IRS can't touch your money. Initially that's what it was about. Mm-hmm. And as you see, that's changing. And so, but there are no rules on the books right now, as far as if you live in another country and you have a business and you are running your business from another country, because that's becoming more and more popular.
Right.
It really is.
Look, I'm just making some notes here. I have two questions going back to something you said a little earlier.
Okay.
So you said that if you hold your crypto for a year, and then after that, it's treated like capital gains, so you will be taxed on the profit when you sell it.
Yes.
So is there any advantage to holding it longer than a year? Let's say I want to hold it 5 years or 10 years, or is that 1 year is kind of the cutoff?
No. So there's two forms of capital gains. There's short-term capital gains and long-term capital gains. So the government encourages, it's almost like retirement. They encourage you to work up to a certain age, and as a result of working to that age, you pay less on your retirement if you haven't already paid taxes on it. But if you retire before that age, you have to pay more money, and depending on when you retire or what your age is, that determines on what age you can retire and get that tax break. Well, it's the same thing with capital gains. If it's short term, means you purchased something, you made a huge profit, and then you sold it to get that profit out. Well, the government, I don't want to say penalizes you for it, but it kind of is. They penalize you for not holding it for more than a year. And the penalty is just that you just pay a higher tax rate for it. However, if you, and I'll have to get back to you with what those tax rates are, but if you, and basically you count it as income. So that's the other thing. So if you don't hold it for a year, whatever your profit amount is, that just gets tacked onto your income. And so you add that to your income, and then whatever tax bracket you fall into with your capital gains and your regular income, that's what you get taxed at. However, if you hold it for longer than a year and then you make a profit, then your capital gains is taxed at a certain reduced rate. And then, so you might have made an income where you are in a certain tax bracket, but any capital gains that you, profits from capital gains, you don't have to pay that same rate that based on the tax bracket you're in. There's a reduced rate, tax rate that you get charged because you've held on to it for more than a year. You can hold on it for more than 5 years. And just like you can have capital gains, say you hold on to it and sell it and it's a loss, you can claim that as well. So cryptocurrency as a capital gains works the same as stock. You can either claim the profit or the gain, or you can claim the loss.
Okay.
It doesn't matter whether it's a long term or short term. Either way, if you sell it at the same that you bought it at, there's you're
even. Right.
Okay. But if you lose money and you sell it and you don't get back what you put into it or less than you put into it, you can claim it as a loss. And that's the important to have a good tax professional, because everybody is different in how they obtain cryptocurrency, because you can purchase cryptocurrency. You can also earn cryptocurrency. You can also be compensated with cryptocurrency. And all of those are 3 different things. And, again, everyone does things differently. Everyone has different strategies and different habits. And that's why, it really is important to, not only just have a tax professional, but has someone that at least has made the effort to learn and understand about cryptocurrency, even if they don't want to delve into it, but at least you make the efforts to take webinars to understand how it all works and what it all means.
Okay, that makes sense. So tip one, one way to minimize our crypto taxes is if we hold it for more than 1 year.
Yes.
Okay, so that's tip one. Now, just going back one more time, real quick, my older question. So for someone who decides to not hold their crypto for 1 year, let's say, a lot of us have crypto Visa debit cards or MasterCard debit cards. We have our crypto, we want to cash it out and use it on our debit card. Then is that just taxed at our normal rate, like just regular taxable income? Is that how it's viewed?
Exactly. So once you access it, and what I am finding, I don't know how they, if IRS is tracking it or if they even figured out how to track it. when you buy cryptocurrency and it's sitting there, okay, as long as you are not doing anything with it, it's just a purchase.
Right.
Once you access it to move it to a debit card, you're
Which
using
is
it.
essentially making it dollars. You're making it fiat. You're converting it to fiat.
Exactly.
Right.
So, but so if you put $50 in,
Mhm.
okay, and then it increased to $20, okay, and
Mhm.
you decided, or increased by $20, and you decide, hey, I'm going to go ahead and take $30 out of it,
Mhm.
okay. Well, you're going to be taxed on that $20 because that $20 is that profit.
Got you. Okay.
That's the way that works. Even if you say, for example, you have cryptocurrency, you have it's $50, it's increased to 100, and you decide, hey, I'm going to take 50 of that and move it and purchase something else.
Mhm.
IRS says you have now used that profit of $50. When you took that 50, even though it's all staying in the crypto space,
Mhm.
you have taken that profit and you've used it, whether you've spent it or converted it to fiat, or whether you've used it to buy another cryptocurrency. IRS says that you have used that profit that you made, and it's can be taxable. But now how they tax it, how that is reported, I'm not quite sure if they have, because right now they have the questions. So you, again, your tax professional will be able to tell you if they've now have a section on forms to add that information in, or does it just get added as capital gains? Because you have to, and that's really is the purpose of keeping good records, because at any point IRS can come back and say, you answered this question, because one of the things they were talking about was reporting, and how the penalties can be very high if IRS catches up with you.
Mhm.
And you have been doing cryptocurrency and digital currency all along, and you have not been answering that question or reporting your profits on your tax returns. And so it's very important to keep records. Keep records of, if you've made a profit, my suggestion is go ahead and pay taxes on it, because
Definitely.
the penalty, if over years and years, if they finally catch up with you and they finally audit you, if you cannot prove what it is that you've made, what it is your losses, what your profit and losses are in that area, they're not going to take your word for it, and you're going to be penalized.
Right. Okay. So this may not be really a way to minimize our crypto taxes, but tip two is keep good records. No
Yes.
matter what.
Keep it, and
Keep
it
good.
really is, because it is a way, because you want to record the losses as well, because you can record your losses and take the loss on your tax return. But if you don't have a record of it or can't prove it, you can't take that
Mm.
that deduction or that loss. And one of the things that it's a real good reason to get your records in order. So I was listening to the webinar, and they were saying that right now they have not put any policy in place where you can. Well, let's put it this way, because it's a little technical and I can't really explain it well enough to make it sense. But there are certain rules and tax laws in place for stocks, purchases and sales, and the timing of doing it, that don't currently exist for digital.
Gotcha.
So if say for example, if you purchase some digital currency today, and then next week you decide, oh, it's going down, I want to go ahead and sell it or do whatever it is, to take that loss. There's certain things you can do that, but you can't do that with stocks. So they haven't caught up with it yet, but based on what I was listening to in the webinar, eventually they're going to try to do the same kind of laws that exist for purchasing and selling stocks, and when you can do it and the timing of it. Because as how many people have, sold their stock, got insider trading kind of information, and either, made a profit or sold it for something or purchased something knowing that it was going to go up. And, they were saying that there's nothing in place right now for cryptocurrency, especially because of how volatile it is. But eventually they'll get there.
Right. Okay. Got you. So tip 1, hold for more than 1 year.
Yep.
To minimize your crypto taxes. Tip 2 is keep good records. And contrary to what I was saying, that is a way to minimize because you can also record the losses.
You can also record the losses. Exactly. Exactly. I'm trying to think another.
I can add this one real quick. Tip 3 is to get a knowledgeable crypto tax professional.
Exactly, to make sure you are taking advantage of every opportunity that you have.
Okay. Awesome. This is so helpful. Again, we are not going too deep. We're not giving people individual tax advice. Dee
No,
is keeping up with what the IRS is sharing about crypto and digital assets like NFTs. So she's sharing with us what we need to pay attention to and some things that we can do to, keep those taxes to a minimum. But as each individual situation is different, you should consult with your own professional, certified, authorized, whatever term you want to call it, tax preparer, so that license, thank you, that license, so that you can get legitimate information. And they are also going to be responsible because if they have these titles and they're giving you wrong information, then they have to be responsible, if you're doing the wrong thing. So that's why we're just sharing this with you, just for informational purposes. What else you got for us, Dee?
And here's the other thing, that one of the reasons that I got into educating people about their taxes is IRS is not going to hold your tax preparer responsible if something is incorrect on your tax return. Now, if they did something illegal, that's something completely different.
Okay.
But if they incorrectly filled something out, or they didn't ask these questions, but when you sign your tax return, you are ultimately responsible for everything that is on that tax return, whether your tax preparer went over it with you or not. When I was doing taxes, one of the things that I sat down before I had them sign their tax returns is I went over every section, every form. And most of the people that I did taxes for, were, just 1099 or 1099 easy, or they might have the Schedule C or Schedule. They might have a part-time business, and and but I went over every form, every deduction that they have. This is what you made. These are all your deductions. This is what you're going to be taxed on. And even I would inquire: is there anything else that you can think of that's not here? Anything new in your And so when you're either choosing a tax preparer, or if you already have one that you've been with for years, you want to make sure that you're having them explain everything that is on your taxes. Because I know some people that are like, oh, I just let them do it, they get me money back. Well, okay, but are they getting it back legally? Or are they completing things correctly, or are they just putting things on there? Because there are things that could be hard to verify.
Mm-hmm.
If brought up for audit, like 7 years ago, you had a magazine subscription. How can you kind of go back and because if you think about things like that, or you gave to a charitable organization 10 years ago, some things are hard to prove. But again, you want to I would even say keep your paperwork and taxes for 10 years now, because you never know. IRS might change the law. Say, it's not 7 years anymore, it's 10 years, but you want to make sure you have someone that can and is willing to sit and explain everything, especially if you're reporting cryptocurrency or capital gains of any kind. You want to make sure you are able to understand, and what I would even do is, write little notes to keep with your tax things so that you can, because you may understand what he's saying right now, but if you had to go back and look at this, you'll be like, oh, what did he say 2 years ago? So but keep your own notes with your tax returns so that you can understand everything that was done in that particular tax return.
Okay. And that makes sense, because as we know, in the crypto space, we are taking ownership, right? We're holding our own coins, we're holding our own digital assets. We are our own bank. So now we also have to be responsible to make sure that what's being recorded is accurate, to the best of our ability. And I like the idea of making notes of, my tax preparer advised X, Y, and Z, because at some point you're not the tax professional. So you have to say, well, this is what they told me. And again, that goes back to making sure you're getting a reliable and knowledgeable and honest tax professional.
That last
so it might take
one.
a little looking around, but that's what you want to make sure you get.
That last one, but something exciting, and I'm seeing how I can get a hold of it. So on there, one of the webinars that I took, it was sponsored by oh my God, what was the name of it? It had Ledger in the name.
Coin Ledger.
No, it wasn't Coin Ledger.
It was
It wasn't them, but they created a software and that they were making available to CPA firms and tax preparers. And the way it works, how like when you want to send me some coins, I can give you my
wallet address.
This software is where you just kind of connect your wallet address in this software for all the different wallets that you have.
And sure that's not Coin Ledger? Because Coin Ledger does that.
Coin Ledger might do, but
this was something else. Okay.
It was another company that was doing it. Might be, I'll have to look. I know it had Ledger in it, because I remember looking to see if it was like the Ledger that I had just
like the cold wallet Ledger.
No, so it wasn't that. But I was like, man, they were offering like a free copy of it. And, and I said, it would be great to just kind of see how that works. And how when you have just the different online coin trackers, where you put your information in, and then as you buy and sell, you update. Well, the way this is, you just put your wallet address in, and it can't hack into your account. But as you purchase and everything, it updates your account in this wallet. In this ledger, so you can see if you made a profit or if it was a loss. And I was like, I just wanted to maybe get a demo and kind of see how it works. But I'm assuming since it's for tax preparers, it's probably expensive. But I said, at least I can get a demo and get a better understanding of what's out there and like what people can ask their tax professional. Like, have you ever heard of this? How would you track if I'm in cryptocurrency? If you don't know cryptocurrency and you're not into the cryptocurrency space, what do you have that's going to help you track whether I made a profit or whether it's a loss, or do I have to pay taxes? Those are some of the questions that you want to ask when especially if you're really getting into the NFTs and what's the other one that we were doing, the thing
virtual real estate.
Yes, exactly. Because that stuff is real. They're even having commercials. The commercials are funny that I think, but they are having commercials about it, you know,
Um,
and so it's real. And eventually, like I said, IRS will want to it's piece of the pie,
Absolutely.
and you want to always be prepared.
That is perfectly stated and a great way to wrap up our conversation. I do want to say this really quick. I'm not endorsing CoinLedger, but they do offer a tracking software that links to your apps. But what Dee's talking about sounds like it's more for professionals. So that could be something
Yes.
different. But you should look into something that will allow you to accurately record your purchases, your sales, how,
Mhm.
what your value was at time of purchase, what your value is at time of sale, all of that good stuff. So I'm not endorsing anything, but since that came up, that they do offer that package
Yeah.
or
And
that
print
service.
out stuff because when you take your, when you, I mean, you want to have stuff already with your tax return. If it ever comes up, you don't want to have to go back because I've done this. I'm like, okay, I should have printed this out and put it with my tax return, and I didn't. And for whatever reason, I needed to go back and get copies of my return. I'm like, oh, what computer was this on? It's like, just do it. Just go ahead and print it out when you get it, or at the very least save it to, PDF and put it in, if you do electronic stuff, create a folder, a tax folder, crypto by year, so that way, and then just dump it in there. So even if you don't want to print it out, you still know, okay, I have a tax folder that I can go back and pull that information and print it.
That's a great tip. Yes, because I put everything long term on my external drive because
Yeah.
computers come and go. So you should have a
Yes.
place for you to have the digital information that you want to hold on to should be centrally located. So
Exactly,
that's a great
exactly,
reminder. All
exactly.
right.
And they're so inexpensive.
Yeah, they're well worth it. The one I have I've been having for years and I still have gigabytes of space left. So
Yeah,
yeah, they
yeah.
hold a bunch of stuff. So we're gonna do a quick recap. So tip one is we want to hold this. Let me go back to minimize our crypto taxes. Tip one is to hold for more than 1 year.
Correct.
As a reminder, talk to your personal tax professional. Tip two, we want to keep good records. And the sub note to that is print those records out so that you can find them when you need them or save them in a good digital space that you can find them easily. And then tip three is to get a knowledgeable and honest crypto tax professional to make sure you're doing what you need to do as far as recording and reporting your crypto information for good old Uncle Sam,
Yes.
right?
Yes. It's a shame you have to add honest in there. You
But the world we live in.
Yes, yes. Let me
So, Dee, this
stipulate
has
that.
been wonderful. So good of you to join us again
Yes.
with more good information. We appreciate you keeping up and keeping us informed. Thank you very much.
It's my pleasure.
So, anything else you want to share with us before we sign off?
I no, they're again keeping good records and don't let the fear win. There, get with someone like Ansela. Ansela is always offering courses that help you get started. It's simple, it's easy, even if, you just kind of take a half an hour, an hour, to just go in and do what she shares with you to do. Don't be afraid of it. Because I love that story you shared about, who was it? Bill Murray, and even at
Yes.
72, he is doing into cryptocurrency.
Mhm.
Don't be afraid because I was sharing with somebody, I said, even if you don't understand everything, I said, you're going to be, but you get in there and try, you're going to be far ahead of those who never even try.
Absolutely. Wonderful tips. Wonderful
Yeah.
tips. Don't let the fear win. I'm going to That's going to be our soundbite for this. You know that, right? Don't let the fear, because that is major. We cannot be afraid of this,
Yeah,
regardless of your age, your gender, your ethnicity. It does not matter. This is happening, and
exactly.
everyone needs to get a grip on it. And it's not even about the potential earnings. Of course, I understand the appeal of that, but
Hmm.
getting the understanding, because this shift is happening, and
Yep.
a day is going to come where crypto is going to be a necessity and not an option. And it only makes sense to get ahead of it, because catching up is a lot harder than keeping up.
Yep,
Believe me.
exactly. That used to be our saying
That was our
at
saying,
the very beginning.
right?
Exactly.
Keep
Keep
up or
up so
catch
you
up.
don't have to catch up.
Right.
Exactly.
Okay. Well, Dee, thank you once again. Thanks everyone for tuning in. We appreciate it. Like, share, and subscribe. New episodes come out the second and fourth Wednesday of each month. And we'll let Dee get on with her day. Thank you, Dee, once again. And I will talk to you soon.
All right then. Bye-bye.
Thank you again for tuning in to the Crypto Confident Podcast for grown women. If you are ready to dive into crypto, but not exactly sure how much you have to invest, let's figure it out. Every month, we host 2 free crypto budget workshops. When you order your Crypto Vibes budget journal on Amazon, that is your key to entry. Order your budget journal on Amazon and go to cryptovibes.com under the events tab, register, and we look forward to helping you budget for your cryptocurrency investments. The Crypto Vibes Budget Journal is a part of the Crypto Confidence Collection, vital tools to help you reach your crypto goals. We look forward to seeing you on our next episode of the Crypto Confident Podcast for Grown Women with Ansela. Remember, get crypto clarity and be crypto confident.